Hi, thanks for joining us on another episode of the After Work Show. Today we are going to be talking about bookkeeping, an important aspect of business that a lot of business owners pay less attention to. It's one thing to have an idea, it's another to have the fund to execute your idea. Then the most important part is to track your money and to know if you are making profit or not. This has been a mirage at large for a lot of business owners. And today we are going to be discussing that at length. And as usual, I'm not alone. I'm with my colleague.
My name is Emmanuel. I'm very happy that we are talking about this very important topic today.
So to talk about all things accounting in business, we invited a guest who is a professional in that field. His name is Michael James, the manager, Powerhouse Management Consulting, an international accounting firm headquartered in Florida, USA. Michael, thanks for joining us on the show.
Thank you for having me, Dimitri.
You know, I've heard a lot of business owners complain about how to keep their financial records. So I think it's a good place to start is how do business owners keep their financial records?
Okay, thank you, Dimitri, for that question. First and foremost, research has shown that a lot of small business owners, in particular, do not keep any financial records. Okay, they feel it's a waste of time. They think they can always invest that time into marketing or doing some other things. But one thing they refuse to understand is if you don't keep your record, you won't be able to make the right decision. Now, talking about how they keep their record, first, there's something we call source documents. Source documents.
Source
Documents, yeah. For every exchange of money that we call transactions in accounts, there ought to be a kind of evidence that backs such transactions. For instance, if I buy something from you, I'm supposed to collect something they call receipt from you. So that receipt is the evidence of the transaction that has taken place. And from that same receipt, I can generate my own record. That is, I can from there capture what we call cash sales. That's the first thing. So again, if they are buying things, probably supplies from their own supplier, they also collect something they call an invoice from the supplier. The invoice given to them by the supplier would be what we would use to capture their purchases. Do you understand?
Yes.
So at the end of the day, if they have this document, they don't even need to start writing things. They should just make sure that whenever they are doing anything that involves the exchange of money, there is a document backing it. Whether it's a receipt, whether it's an invoice, whether it's the bank statement that shows the details of the transaction, there should be something that shows that that transaction has taken place. So that is the essence of source documents here. And that should be the basis for any financial record keeping.
So you're saying you don't even need a book somewhere that you're recording that I've made so sales. Once you have the receipts or your invoice, it takes care of that.
Yes. You don't even, like I said earlier, they don't have the time. Most of the time, they are the one doing the sales. They are the one sourcing for the goods at the same time. They are the one trying to attend to one person or the other. They might not have that time. But one thing they should just make sure they do is everything that they do is backed up by documents. And I think receipt is is out there. You can buy a receipt of 500 naira, buy a receipt of 1,000 naira, just to document I sold so thing, and you have a duplicate of such receipt that you issue to the customer. See, these are the things your accountants will need from you to prepare your accounts. If I have those documents that shows what you bought, I have those documents that show what you sell to the customer. I have those documents that shows the electricity bill you paid. Definitely, I believe the PHC are going to give you what we call its utility bill. And when you eventually pay that utility bill, they will still give you what we call receipts. So once we have these documents, I don't need any book from you else. I'll prepare your account and generate your profit and loss for that period.
So what if you have a book? You decide that okay, apart from the receipt, the documents, you want to have an accounting book.
Yeah.
What should be on the accounting book? I mean, how do you tabulate your accounting book?
Okay, I think the first thing is the date the transaction occurred. It's just for us to know that on so date, these transactions, what were the transactions you did for that day, the dates, the description, just a little description of what the transaction entails. Like for instance, bought goods worth of so from so person, just the date, and sometimes if you have the name of the vendor, you have the name of the vendor, the name of the customer as the case may be, and also the amount of the transaction. Those are the vital information needed to prepare your record or your profit and loss for that period.
So, in your experience, what are the common mistakes you are seeing businesses make?
To answer your question, I would say from experience, most times, most small business owners, they cannot differentiate between their personal expenses and the business expenses. That is the first thing. You see them doing different kind of transactions, they won't be able to explain whether it's their own personal expenses or the business expenses. Has always been an issue for every accountant. So there's something we call entity concept in accounting. We believe that the business is different from the owner. So the business has the right to own its own assets and also to owe people. So if you are doing any transaction at all, you need to be sure, you need to be specific that these transactions are business related transactions. Then secondly, I think one of the mistakes that small business owner makes is planning. Most times they don't get to plan their resources. A situation whereby someone has probably some couple of millions in the account, and he has written down expenses that is even double of the amount he or she has in the account. So they ended up sourcing for funds to cover up for the deficit. And while trying to cover up for the deficit, they ended up getting the funds at a very costly, or let me say expensive rate, which at the end of the day, the cost of the fund might even outweigh the profits they're supposed to generate from the business. So again, not planning their resources, that is one. Secondly, not hiring qualified people. It's not even in accounting alone, it has to do with other things as well, like probably getting a marketing person or getting a professional that could help out in your business. They always want the cheaper staff or the cheaper hires. And because of this, they get people that are not qualified enough to manage their affairs or to manage their business for them. At the end of the day, it's a double jeopardy for them because they get to pay and they're not getting anything of value in return from these people that they hire. Well, another mistake that small business owners make is, again, they always believe that whatever is in their accounts is what they have earned. I have a typical example of someone that got a contract. The contract involves she's supposed to service the time for 2 years. Of course, they can't get to pay at least 80% of the invoice value. And having that money in the account, she believes she's doing very well. So when she was talking to me, I told her that, come, you haven't earned this. In account, this money is still a liability until you are fully given the service and the customer is satisfied. That is when you can say you have earned this. So to her, the balance in her cash account or in her bank account is equivalent to profit, which is not the case. Profit is what you have really worked for, what you have earned, and the customer, whether the customer has even paid or not, in accounting, you recognize it as profit, provided you've given the services, and the customer has actually accepted to pay for that service. So, irrespective of the time the cash is paid, you have earned that revenue. So, mistakes that small business owners make. Another thing is budgeting. As far as I'm concerned, budgeting is the first level of control. Control for you as the owner, control for whoever is working with you. If I set an amount that, okay, I'm going to spend, let's say 200,000 naira for lighting of the office, I need to be able to track the expenses I've been paying so far on lighting. Anytime I'm going beyond that budget, I should call myself to question. In the same vein, if you have put someone in charge of that kind of activities, the moment they are going beyond the amounts you have set aside for that purpose, you need to call their attention. You need to investigate what we call variance. What do I call variance? Variance is the difference between what you have actually set aside and the actual. So you need to ask questions. What is the difference between what I have set aside for this purpose and the actual amount I am spending? You need to look at alternative ways to achieve your goals if it is necessary. I'll give you a typical example. In my office, we never envisaged that the lights will go for like 8 days or 2 weeks now. And at the end of the day, we realized that we've been spending so much on diesel. So I had to call the facility manager. I can't believe this anymore because the amount I have budgeted for lighting is being exceeded. So we need to find a solution to that. So also, there are so many things that relate to decision making that every business owner also be aware of to make sure that you are on the path of profitability. That's what I can say.
I have so much follow-up questions, but I'll let Emmanuel take it from.
Okay, no problem.
Okay, so one of the issues that you mentioned, why they don't make use of what's it called? They don't keep records is because of cost. I mean, that's the general problem that small businesses face. They don't have enough money, so they're always managing. So first of all, they can't even afford to hire an accountant that will be in-house to be keeping the records for them. Then they can't afford to sometimes pay an external accountant to come and audit their books and everything. So in that instance, and you don't really blame them because money is scarce. If you're a small business owner, you're already managing. So what advice would you give such people?
Okay, good. One thing I believe is the moment you make a decision to be an entrepreneur, you should be open to learning. And when I say learning, you have to learn very well. You have to be very vast in anything that has to do with your business. And accounting is not an exemption here. They are basic. You could just enroll yourself for just probably a crash course that talks about the basic of accounting that can help you as the business owner to keep record in the best way until you have the resources to outsource the accounting job to a professional. Now, it's going to be easier for the professional to do your record keeping now because you understand the basics and you've been keeping track of those things that you ought to keep track of. So you just supply the information to the accountant at that point in time to just prepare your profit and loss. And again, I don't want to believe this accounting is very technical like that. It's not technical.
I think it is.
It is not. The thing is just for you to understand the basic. If you just take a crash course, that will solve the problem. That's like I said.
Okay, so some small businesses don't really see the need to keep accounts.
Yeah.
That's one of the reasons why they don't keep accounts. So what would you tell them? I mean, one reason I could think of is, let's say you want to get funding, for instance. The investors want to see your how far you've been performing. They want to see your record before they will put their money there. And if you don't have, they will not give you. So what other benefits can you use to convince a small business owner, like these are the reasons why you should keep accounts?
First and foremost, being an entrepreneur means you will be making a lot of decisions.
Yes.
And I want to believe something. For your decision to be accurate and just, it has to be based on some certain facts, right? Some certain information that you need before you can make that right decision. So, if you are the one saying I don't need an accounting record, I tell you, you're going to miss it. You're going to miss it in such a way that before you realize, well, like you said, one of the reasons that's very germane is when you want to scale your business and you don't have the resources to fund this expansion. Sometimes you need investors to come in, you need a bank loan, and one of the prerequisites is for you to give them your accounts before they can know whether your business is profitable, whether you can generate enough cash flow to repay your loans or to at least give the required returns to the investors. But aside from that, for you to make a good decision on daily basis as a business owner, you need the records. You need the records to show you that you have the ability to fund this. You need the records to show that you need to hire a staff now. Because some of those things, some of those mistakes they make is this. Oh, they have a lot of things to do. They need to hire someone, and they go ahead and hire someone that is, let me say, overqualified for the position.
Mm.
And they get to pay crazily. And at the end of the day, there's nothing left for them. Again, as a business owner, you want to scale too. When would you even be able to determine that it is time for me to scale? You understand what I'm saying?
Yes.
All these things has to be based on some certain records of your finances, some certain records of what you've been generating, some certain records that shows the statistics of your demand and the need for you to meet those demand, some records that shows that, oh, at this point in time, I can source for finance because I can repay. So if you don't have any financial record that keeps track of what the business, what the position of the business is, you might not be able to make the right decision. I'll say again, it's all about making the right decision at every point in time.
Okay, one more question from me. Now, keeping paper, like you mentioned, receipt and everything, it can easily get lost. So everything has moved from paper to digital now. So bearing that in mind, are there like accounting softwares that you can recommend for a small business owner that they can afford to buy?
Yeah, there are various accounting software. But I don't think I'll be recommending software for someone that doesn't even know how to prepare an account, that doesn't have the basic knowledge of accounting. You understand that? Well, for software, we have the one that is readily available is QuickBooks. It's a cloud accounting software. Anywhere you are, you can get into your account and see what is happening there. You can always know the status by time, anywhere you are. We have Sage, we have SAP, different kind of accounting software that we can make use of. But like you said, most of the transactions are done digitally now. What you can do to help yourself is the moment you are doing any transfers from your company's account, make sure you put the right narration there. And the moment someone is transferring money to you, it is you just have to tell them that they should put narration. If they cannot put narration of what they are paying for, you should find a way to track what this individual is paying for and find a way to also keep your own record.
So one last question. This one is actually a little bit funny. I've seen companies that if somebody goes to buy a bag of pure water, if they use their money to buy it, you must come back and fill one piece of paper and give them. And to me, I used to think, wow, what's that 500 naira, small money like that? Is it really important to actually take records of them? Now, these are very good companies that are doing this. They are few though, right? For people that are confused about why this is done, can you tell them the importance?
Okay, good. One of the qualities of accounting information is verifiability. What do I mean by verifiability? It means that when you are not there anymore, can somebody pick up that account and be able to say that what you posted is right or what you have recorded is right? For that to be done, there must be, like I told you earlier, a document that backs every single penny spent. So that if that same account is given to someone else and all the supporting documents is given to that person, they can arrive at the same results that you arrived at. That is verifiability. If someone that has the knowledge of accounting, if they take up that same information that you have generated, can they arrive at the same results? Do you understand?
Yeah.
It has to be verifiable. That's the reason.
I think that's one of the reasons people think accountants are stingy. Because you buy a sachet water and they are expecting you to keep record of that. I mean, but that's by the way. Now, what I want to talk about is you mentioned earlier that business owners have a problem with separating their personal expenses and the business.
Business, yeah.
You know, now what I want to ask is a business owner who is the sole signatory to the account. You are seeing 3 million naira or 5 million naira lying in your business account.
Okay.
You are the sole signatory to that account.
Yeah.
You have personal needs, for example. How can't I go to that account and use the money from the account? It's my company's money. I worked for that money.
You're right. See, talking about taking from the business, I'm not saying you can't take from the business, but wherever you are taking from the business, you have to support it with something that shows that this is your own personal expenses.
Mm-hmm.
Do you understand? It's like a loan.
So you can take a loan from the business.
You can take a loan from the business and you must have the intention to return it back. So the record is going to show that social date you took certain amounts, and in that instance you shouldn't be paying the vendor from the business account for personal expenses. And that has been the basis of the confusion. You are paying different vendors from your business account, even when the vendor you are paying has nothing to do with your business expenses. So rather, for accountability's sake, you can transfer that money from your business account to your own personal account with a clear description that shows that this is a loan that the business is giving to you. And at the point of you also returning the money back to the business account, you have to specify that this is the repayment of the loan you took. So there will be a loan created for you in the books of accounts that shows what you are taking and what you are returning back to the business. So for accountability's sake, don't pay vendors, let me say personal expenses vendors, don't pay them from your business accounts. And also make sure that there is adequate narration for whatever you're taking from the business.
What do you say to the idea of, because as a human being, I mean, if you are the sole owner of something, you are the sole signatory to an account, there's no mechanism that checkmates you. Do you understand what I'm saying? It's hard for you to really discipline yourself and say that no, I'm taking a loan for my business and all that. I mean, what do you advise people have like someone who is a third eye who can probably co-sign, maybe like maybe a family member or something, so that somebody holds you accountable.
I get what you're saying.
And consider the trust issues.
Yeah, I get what you're saying. Well, let me be very realistic with you. In Nigeria, even if you have a third party that is supposed to checkmate you on whatever you are doing, such individual cannot hold you accountable per se because they are not the owner. If they even query you or ask a question, if they are being asked about it, you tell them, okay, I'll come here now. And you know this business. Why would you be asking me questions, stupid question on how I spend my money? So I think it has to be a personal decision, a personal will from you that, okay, this is business. I want to treat it as business. Anything personal here, I need to be fully accountable, right? And see, the survival of the business is the major thing. If you want the business to survive, then you have to make sure you are not draining the business. That's the thing. And you have to make sure you are accountable to yourself because you are in business to make money. And you are in business not to just make money for a short time. You also need to sustain the business too. So some of the money you make has to go back to the business. And for that to happen, if you have trained the business, I don't think you'll be able to even invest back in the business.
You know, as an accountant, what do you also say about, sometimes as a business owner, you think that you are making a lot of profit, but you are really not. If you really track your record, you are really not making a lot of. What do you think is a decent margin? It's a debatable thing. I mean, people talk about 50%, 100% profit. What do you think is a decent profit margin for a business to really, for you to really say that the business is profitable?
Okay. there is no one bullet answer to that, because what will be your profit margin at any point in time will be the combination of different factors. First and foremost, you need to be able to pay your business expenses. Those are the first thing. And if you can aggregate or estimate the total amount it will cost you to sustain or operate the business for that period, you would have been able to assist yourself with what should be the profit margin. Okay, I'll give you an instance. Let's say my operational cost is, let's say, 20 million naira in a year. That includes the rent, that includes the salaries I'm supposed to pay and other bills, utility bills and the rest. Then again, I know I'm still going to incur some certain direct costs that relates to me buying the goods I want to resell or buying the raw materials, as the case may be, for you to produce. You have to factor in all this before you'll be able to say this is the price. Okay, like I was saying, 20 million naira for operational cost. And meanwhile, the raw materials and other things that you're going to use to produce will cost you, let's say, 20 million naira again. That makes it 40 million naira. So, what will be the total output for that production period? You need to be able to estimate it. And for you to now know the amount you put as price on that output, then you have to, the 40 million naira for your overheads and direct costs, you put it aside. The total output, let's say the total output is 1 million units. And for you to even break even, that means you have to sell that for 40 naira, right? For you to generate 40 million naira. So what will be your profit margin will be your strategy for that period and the level of, let me call it the life cycle the business is currently at the moment. If you're a new entrant, you don't want to put a price. That'll be crazy there. You want to attract people with pricing. So you might just want to break even in the first year, which means your operational and direct cost is 40 million naira. Your output is 1 million. You can just agree to sell for 40 naira per unit without even putting any profit margin. If the strategy is for you to gain a certain share of the market. Do you understand what I'm saying? So secondly, if you know you're not getting that required brand awareness and people are getting to like your products, gradually you can just post maybe 10% as the case may be, 15% as the case may be. There is no general rule that says this should be your profit margin. The basic is for you to be able to break even. That's the first thing. Put a price that will make you to break even. Then, if possible, help you to generate returns, adequate returns for the amount you are investing. We all know that we can use the same resources for different investments. So, for instance, the basis is risk-free investments, which we call T-bills and bonds. If I invest 50 million naira on T-bills, what is the return I'm going to get from these T-bills? Okay, maybe the rate is 10%. Then you should tell yourself that I don't want to get anything less. Do you understand?
Yes.
So again, because business involves some risk taking, you want to compensate yourself for taking that risk and putting your money in the business. So you can go beyond the risk-free rates, which is the T-bills rates. So, like I said, it's just what you intend to achieve per time, but make sure you break even so that you don't run into loss.
If you're a business, if you're maybe a millionaire,
Okay.
what should be your operational cost every month?
Well, operational costs sometimes are not within your control. Like the instance I give you now, probably I never envisaged that the night would be off for 2 weeks, and I ended up spending more. But at every point in time, you should maintain an operational cost that would give you some level of profit. That's what I can say. You can't use whatever you have, whatever revenue you are generating to run the business. You have to keep a certain reasonable cost and look for alternative way of achieving the same thing. Understand?
No, do you have follow-up questions?
Well, since you are looking at SMEs now, they don't really know all these operational costs or this. They just every money they get, they just put it in the business, and then they take from there to go and feed their family and everything. I have a friend that was working in a place that they were owing her salaries. And one of the problems, and it's not because they were not making money, it's a publishing company that publishes profiles of top, these top politicians, top executives. So they were making a lot of money. But the man, according to her, the man is so reckless such that when big money comes in, because she was the man's executive assistant.
Yeah.
So in a month, 20 million naira may come in a month. Then it will take the next month, nothing will come in. Then a month or 2 months later, another lump sum like that will come in. So whenever money comes in, that's when this man will remember he needs to buy a car. He needs to go to Paris for vacation. And it's from the money that is coming from the company money. That's where he takes the money, just spends it anyhow. So there's no division between him and the business. And this company is growing, like it's almost 15 years. Do you get it? So that corporate governance lapse is there, and the way it's going, the business may most likely die with the man when he dies because there's no structure in place. So what advice would you give people to avoid, finding themselves in that kind of situation?
I think the statistics are clear sometimes. Almost 50% of the small businesses, or out of every 10 businesses, like 5 go into extinction after the first year. And before the 5th year, another 3 that have gone into extinction.
Tied this to mismanagement.
At the end of the year, it's just mismanagement. And mismanagement affects so many things. That is one of those things you're talking about now, inability to pay salaries. Now, let's assume Nigeria it's a very buoyant economy. Do you think your friend will still be working for you?
He has already resigned.
Thank you. That is how he's going to lose good ends. And before you know it, because you cannot pay staff salaries and when due, then it affects the business. And before you know, he has to wind up or liquidate the business. So that's financial discipline is very necessary in business. And I think it's just that mentality we have in Africa that we always believe it's my business. I can do whatever I want to do with that money. You'll find it difficult for many African businesses to even attain the level of the global status because they don't even have the resources to scale their operation. They don't have the resources to expand as necessary. They always look at the business as a source of, okay, let me just feed myself, feed my family. If not for that, if the man has seen the business as an entity that needs to grow as well, when those money are coming in, he would have invested those money in expanding the business, creating new products that can also generate more revenue in the future for the company. So it's all about mentality, which is almost difficult for you to tell the resource owner how to use his resources. The end game is he bears the risk alone and he enjoys the profit alone. But they should always know there is time for them to take profits and there is time for them to invest in the business so as to generate more profit in the future. So advice is, if he has the opportunity to tell the man, he needs to be financially disciplined with the company's money and not seeing the money as his. That's what I can advise.
Someone who works for an international company, you manage foreign accounts. How do you compare their culture of running businesses, those international companies, and our culture here in Nigeria?
Wow, I can't speak about my clients because of the ethical issue involved.
Okay.
But I'll say, generally speaking, now it seems the culture is everywhere, especially when it has to do with unstructured business in terms of ownership. where the ownership is just a one-man business, except that person or the business owner is someone who is financially inclined and understand all these things. Most times they get to treat their businesses the same way the entrepreneurs or small business owners in Africa here do their stuff. I'm privy to an information of a client as well that they borrow a lot to finance their operation, and at the end of the day, it's a loss. Of course, if you look at the revenue they are generating huge amount of money. But what is taking the money away from them is, for instance, you have to invite celebrities, models to model your clothes, and those guys charge crazily for the money.
Yes.
Sometimes that's the essence of cost tracking now. If someone has sat down to confirm that, okay, I am paying so amounts to get models to model this product I'm selling, how much is the profit margin I'm even getting on these clothes? Does it really cover for me? Does it really cover the amount I'm paying these models? Instead of using well-known models to model your clothes or display your clothes out there, is there no better way, or some upcoming celebrities, some upcoming models that won't charge you so much, and at the end of the day, you still achieve what you set to achieve? So it's all about having that knowledge, that information regarding what the right decision to make when it comes to financial cost or financial implication at times.
Like I'm glad you mentioned clothing now. In fashion, for example, you say you want to sign an ambassador, you want celebrities to wear your clothes and all that. All those things you don't get immediate gratification for those things. It's over time that you're going to make that money. Is it a good argument to say that, we are going to make this money over time if we use this celebrity to model our clothes and all that? Is it something that is there? Because I've seen entrepreneur and his accountant argue over, we need to spend, the entrepreneur, the CEO will say that we need to spend this money. The accountant will say that no, sir, we cannot spend this money. We don't have the budget. Have you been in those situations before? How do you resolve it? I know that this is your boss. How do you?
Well, I think you just need to present your facts to your boss. Your boss is business oriented. In his own mind, that strategy is the best. That if you should get someone to market these clothes, a known face, a celebrity, people are going to rush it. Well, first and foremost, you need to be able to present some facts. Can we have examples of companies of that same size, of the same products, done something like that, and they were able to scale their revenue, they were able to generate higher revenue? You need to be able to back whatever strategy you are doing or you are taking with facts and figures. I think most times entrepreneurs or small business owners, they are most emotional about something. They don't want to ask questions whether that's the best strategy for them. Strategy is good when eventually at the end of the day it's going to generate the returns for we at hand now. It's going to generate the returns required. So if I was in that guy's shoe and my CEO is arguing that if I use this celebrity, it's going to make money for me, I'll need to dig out some facts regarding what that celebrity is even known for. Question, you don't even know. The audience, the fan base of this celebrity we are talking about, are they your targeted customers? I can't imagine okay, for instance, Business Elite Africa now is looking for a celebrity and you go and pick someone in entertainment. You understand what I'm saying? This is not an influencer that people know for.
Relevant to your niche.
Yeah, it's not relevant to your niche. That's the question. So most times you need to be able to portray your strategy and be able to give me an estimate of what the outcome will be before I can agree to that kind of strategy. So accountant wants to see facts. If such spending is not necessary based on cash flow, like I said, so many things have to be considered. You have to consider the financial obligations of that company as at that time. if the financial obligation that the company has will not accommodate that kind of expenses, then it needs to tell the CEO. We don't have enough to, we don't have so much money to throw into marketing now. We can also put this, or better still, we can achieve this objective by going through this route instead of this route that we are going to. One thing you should never do is to tell your CEO that there's no, I mean, the proposed strategy rather, the proposed strategy is not the best, and yet you don't have an option or a better option to present to him that he could adopt.
Banks, what do they look at before borrowing business money?
The bank will do what we call risk assessment. If you approach a bank for loan, first and foremost, they want to know your ability to pay. And the ability to pay cannot be assessed from the average turnover in your account. So most times the bank will look at, oh, what have you been generating in terms of sales? For them to know that if they give you this amount of money, then you'll be able to pay. They will also look at your profitability as a business. Are you making profits? If you're not making profit, if you've been making loss over a period of time, why do you think the bank will want to give you loan? Because they believe that money, the project you want to invest that money on, you are not sure you can make money from it as well. That is true. Then the bank wants to look at some other financial obligations that you have. For instance, if I'm a banker, I'm looking at creditors, you are owing your creditors also amount of money. If I realize that probably there's some loans in your books already that you are yet to repay, I won't give you such loan. And again, you have enough collateral in terms of assets.
I think that's
in case you default, the collateral, most times it has to be something of value that is, let's say, at least 5 times the value of the loan, the amount of the loan you want to borrow. So the bank will look at your ability to pay and the protection that they have against your default, which is the collateral.
So just a follow-up question. These days, banks, they are reluctant to lend money to SMEs.
Okay.
And I don't know why that is the case. But they are willing to lend to individuals like you and I. So why is it a problem for them to lend to businesses?
Okay, like I said, they have their own risk assessment procedures, and because of this, there are certain requirements set for these small business owners to meet before they can actually give them the loan question. Well, a typical example is a business that has been in existence for, let's say, 5 years. You ask them for the basic things like their financials. They won't be able to provide the financials for the bank. And even if they provide the financials, sometimes they are doctored. The bank will need an auditor to verify that statement, that financial statement they presented before they can agree to give them loan. Again, the default rate from small business owners are very high. You give a small business owner a loan for expansion or to finance their trades. They ended up spending the money for personal things. That is when somebody will realize that, he wants to do wedding anniversary. Somebody will realize that he needs to buy a new car. The purpose of the loan was for business, but they get the loan and use it for something else. But for you and I, what is the risk to the bank? First, the amount they will be giving you, or the amount you'll be requesting for,
It's quite low.
will not be as much as what the businesses needs. And before they even agree to give you loan, probably that account happens to be your salary account. They know you will continue to get money from this, and they won't even give you an amount that is more than maybe 30% of your annual turnover on that account, or annual salary that they would have estimated. They have some certain algorithm that they would have configured or programmed into the system. That's why you see the amount you're eligible to collect. So they do their risk assessment and they will ask you for your BVN. You know, the CBN policy, there is an existing policy from the CBN that allows the bank to debit your account in any other bank. So a situation of whether you're going to default is not there. provided they have a BVN, they can get their money back, except you don't have any active accounts in any of Nigerian banks. So the risk for them is lower for you as an individual than giving the loan to a small business owner.
Well, time is fast spent.
Okay.
Just now that we started the show. Michael, thank you very much for your insights.
Thank you for having me. Thank you.
We appreciate it. You guys, I hope you have learned one or two. I mean, you can play back the video and take notes if you haven't been taking notes since we started the show. I mean, this is a good place to live in. So if you're a business owner, you have a business, or you plan to have a business, I mean, you should get your bookkeeping right, as you have heard the danger in you not doing all that. As for me, I'll see you next week, and I promise that it's going to be an exciting episode next week. Thank you from here.
Thank you.